LiteFinance, the world of financial freedom.
Hello guys, it's a Monday, January 16th, and it is time to start the forecast for this week in the markets. As usual, we will begin with the macro calendar, and then we will sum up what we know in terms of fundamentals, based on which we will plan our trades for the Euro-USD currency pair. So starting on Monday, we will get a Eurogroup meeting and the Bank of England Governor Bailey's speech, but US has holidays, so the second part of the day most likely will be less interesting. On Tuesday, we will receive labor data from the UK, OPEC monthly report, and the CPI inflation data from Canada. Next, on Wednesday, very early, we will receive the BOG interest rate decision, which should remain unchanged, so we must focus on the press conference rather than the decision itself. A couple hours later, we will get a CPI inflation data from the UK, Eurozone, and after that the inflation from producers' side, the PPI data from the US, and Beige Book will be published. So on Thursday, we will get the Philadelphia Fed Manufacturing Index and crude oil inventories. So finally, on a Friday, we will get retail sales from the UK and Canada, and that would be basically it for the most important events from the calendar. Now let's move on to US dollar fundamentals, because US inflation data made the market believe that the Fed would raise the rate by 1/4 of a point in February and finally destroyed investors' faith in the US dollar, which means most likely is the beginning of a new uptrend. So let's discuss this topic and make a trading plan for Euro-USD currency pair. So financial markets reacted to the 6th consecutive slowdown in the US inflation much calmer than the previous 5. The S&P 500 marked the smallest daily rally since April, while Euro-USD declined after soaring to 9 months highs. So traders are gradually getting used to the easing of a price pressure and are becoming more and more convinced that the Fed will move from raising rates to lowering them sooner or later. And for most of 2022, the Fed often won battles against the markets. In 2023, the initiative passed to investors. So the consumer price growth declined from 7.1% to 6.5% year on year, and from 0.1% to minus 0.1% month on month, and together with the core inflation slowdown from 6 to 5.7% year on year, which is another confirmation that CPI has peaked. So inflation has fallen, which allows the Fed to reduce the monetary tightening rate and undermine the USD position. So CME derivatives raised the chances of the federal funds rate rise by 25 basis points in February from 77% to 95%. And the heads of the Philadelphia and the Boston Federal Reserve Banks, Patrick Harker and Susan Collins, agreed that 25 basis points is the best option. Markets are confident that CPI will continue to decline. Therefore, the divergence of views is the main reason for the conflict between investors and the Fed. The markets don't believe in Fed not because of its past mistakes. Investors are aware that monetary policy depends on data. Its variability can fundamentally affect forecasts and the central bank's final decisions. In addition, everyone is well aware that the Fed needs to turn hawkish because, according to the most optimistic estimates, PCE will not fall to the 2% target. Inflation will remain at higher levels than before the pandemic, which means that the work of the Fed will remain unfulfilled for a very long time. However, and no matter how much USD buyers rely on rising core inflation by 0.3% month on month, rising services prices and labor markets strength, it is clear that the USD is no longer the king of the market. It's time for the euro to rule. The fact that Euro-USD did not reach the important levels of 108 and 1082 made the idea of taking profits on long trades entered at 1069 unreasonable. Now it makes sense to add up to them on corrections. And so levels 1095 and 1104 serve as the main targets for the Euro-USD uptrend. So that would be all for today. Thank you for watching and goodbye.